The S&Ps are near a short-term high, followed by a pullback in June, on the way up to higher prices in August. Today is June 4th, after the market closed, and we are basically reaffirming that viewpoint which we had last week, which is that the market's in a trend that has not completed yet. It's in the fifth wave of a rally that started on April 7th, and is likely to end between the 6th and the 11th of June, more likely closer to the 6th. And then we're looking for an ABC pullback. We talked about it last time. It could be meaningful in the sense we haven't had any meaningful corrections. And this one could be 50% or even possibly bigger than the upside rally that we had since April. It's not a 50% rally from the high, but it's 50% of the size of the move up. Okay. And it might get one or maybe both of the gaps that it left on the way up. If it does so, it does not mean we started a bear market. It does not mean the world is coming to an end. The whole situation is basically in place that the market should still go higher. We have numerous cycles that have been saying the same thing, that there's a high in middle August, early to mid-August, and another one in the middle part of September, followed by a breakdown from September into October. And then if that continues to repeat, and it probably will, then the market should rally strongly at the end of the year into early next year, completing whatever upside this bull market still has left in it. Okay, now the cycles we're looking at are the same ones. We're seeing the 20-year cycle is the dominant. It's still incredibly similar to what it did 20 years ago. As you can see in this picture, this is what it did prior to the rally, and this is what it's been doing after the rally. And based upon that, it says we're really close, a few days away from topping area, followed by a breakdown in an ABC format. It's still a pullback, but it could be enough of a jolt that people are surprised because now everybody's bullish. And then it goes up into August. We also mentioned that the 31-year cycle was doing the same thing, and it has the same pattern. And we also noted, based upon the timing system that we have, there were several other markets that were very, very similar. One of them was in 2007, at least at this point. Another one was in 2020, after the pandemic breakdown. And they follow up very much the same way. They all have some kind of pullback in June. Now, they don't all agree on the pullback end point. So the safest bet is to think that there will be a low around the 16th or 17th of June. The 20-year cycle says there's one more low around the 26th of June. But after the first level of pullback into the 17th, it's possible that will be the low, and then we go strongly higher into August. The price resistance level, so far we have not broken above the 60.17 resistance level, which we put on the chart numerous times. It's one of our matrix lines, and it's a very hard thing to break. We haven't broken it yet. We expect to break it, but we need to get above that and then probably reach a little bit higher before the end of this week or early next week into 6150 to 6200 is the most immediate high point. On the way down, we're looking for 5500. It's possible it could go even lower than that, despite how crazy that may sound to everyone. It's possible. And then we go strongly higher into August. Okay. Now, we have been talking about probabilities, and the truth is, you can only talk about probabilities. Each of these cycles is not repeating exactly. Many of them have been in the market for a long time, and they all have been repeating. The second highest probability is the 60-year cycle, and align with that, interestingly enough, double it, 119, 120 years ago, the same pattern exists. And that one basically goes up without a huge pullback in June, it has a little one, and then it goes up into August and down into October again, and then it goes up again. So we have a lot of information reinforcing the same storyline, and therefore we're still assuming that probability that the pullback in June is meaningful. If, however, it breaks above the 6350 area, which we've been talking about for some time, then the odds are good that the market will go significantly higher this year. Even into the August high, we could have quite a bit of a rally, okay? And so we're looking at a pretty straightforward situation. Now, the market The market this week pretty much is doing what we expected. We expected a low around the 29th or 30th. It did so. It was not a major low, but it did come in. It was the low of the week, interestingly enough. Even after the NVIDIA rally, it came and took it all back. And this week it's been rallying as expected, and it should go up a few more days, possibly until Friday. And then if it doesn't get high enough, I probably would think that it's still probably going to come down starting next week into the 17th of June, possibly to the 26th. But after the 17th of June, if it's done a big correction, I would be starting to think in terms of buying. Now, the momentum balance technique, which we use to validate our thinking, is basically saying the market should take out the highs. And it said that about halfway through the rally, that the momentum is strong enough it should go higher. We also wanted to point out something, that what we're doing is not simply fractals. We're not just looking to make up new patterns that look like the market and then they're continuing. What we do has a mathematical basis to it, a cycle basis to it. And you can have pattern recognition programs that'll give you a number of patterns that have been accurate in the past, and they do different things in the future, and so you don't know what to do. That's not what we do. What we do is we sort through, using our formula, the various patterns that are repeating. We locate which ones are real and which ones aren't, which ones are likely to continue going into the future and which ones aren't, and that's the basis of our work. So I don't want you to be confused that this is just looking for something that fits and hoping it'll continue. It's not what we do. All right. Thank you very much.